Greetings. Happy New Year. We thank God for having crossed, all of us, for those of us that have managed to clock. This year, as I said in the previous videos, that let us purpose to be financially literate. And me being part of that, I will facilitate you. Now, in this video, I'm going to cover financial literacy, but specifically on persons with a disability, persons with a disability, or persons with disabilities. And to reinforce this, I will assume that this person I'm talking about is earning 200,000 per month. Yeah. Now, this area is one of the areas that are rarely talked about, but it is very vital because some of us are people with disability, but they don't know that they are eligible for tax exemption. Yeah. So in this video, I'm going to tell you if you're exempt as a person with a disability, how much are you actually exempted to pay? Yeah. And this law is just to ensure equity, yeah, in the society. Because you see, people with disability, there are some benefits that people without disability are enjoying that with them they are not able to enjoy. So the policy framework must also be able to capture this so that we be fair to them. Yeah. For example, someone who is physically challenged might not be able to drive himself. Yeah. So this person has to go to the extent of hiring a driver. Yeah. Or even hiring somebody who will move around with him. Another example could be somebody who has no sight. Yeah. So this person will need somebody to walk with him or her around, and also buy the kits that or kits that can enable them maneuver around. So they need to be aware. If they are not aware, they need to be aware of this specific provision, that is Persons with Disability Act 203 and updated 2025. So let me just take you through this. So if you know someone with a disability, or if you are the person, then please stay tuned and ensure you understand this and you implement after having learned what we are going to learn here. Now, all these, we also have other deductions here. In as much as this video is going to focus on tax exemption, but maybe when you apply with the Ministry of Finance or Cabinet Secretary for Finance, you can also be eligible for exemption for some of these statutory deductions. But for this video, we are only going to touch on tax exemption. So it is provided that if you are eligible if you're eligible as a person with a disability, then you are exempted to up to 150,000 per month of earnings. Yeah. So assume that you're earning 200,000 and you've not applied for exemption for this particular deductions or statutory deduction. For example, AHL, Affordable Housing Levy, and also SHIF. I want to assume that this deduction, in their nature, it might not be easy for you to get exempted. So that's why I will only focus on taxation. So we have other statutory deductions that will be subjected to this particular income. Yeah. So we have pension contribution. I said earlier that pension contribution is not a taxation, or is not a tax. Pension contribution is just a cushion towards your golden days, or when you retire. Yeah, when you retire, at least you get a stable income from pension scheme as a pension benefit. So you are just contributing. It's just a first saving, yeah, for the golden days. Yeah? And for somebody who is earning 200,000 in 2026, you are going to contribute a maximum of 6,480. 6,480 per month. Translated annually, or annual contribution will be 77,760. Then we have, before I go to the next, for this pension contribution, I had covered it in the prior video. So if you want to know how to calculate it, or how you can arrive at this, just go and watch that video. Now for AHL, affordable housing levy, it is being the levy is at 1.5. Yeah, so 1.5 by employer, 1.5 by employee. So 1.5 of 200,000 comes to 3,000, and annualized, you multiply by 12, it becomes to 36,000. Then we also have SHIF. SHIF is Social Health Insurance Fund. So this is contribution towards your insurance cover, and it is statutory, it's mandatory. So it is at 2.75%. So 2.75% of 200,000 comes to 5,500 per month. Annually, it translates to 66,000. Now, in this example, gross pay is 200,000. Then we have to deduct the exemption, tax exemption for person verified, or person as certified by National Council for persons with disability. So it's called National NCPWD relief. So it is a relief for persons with disability. So it's at 150. So we deduct. Then I said earlier that this pension contribution, in as much as it comes with the benefit of which we call pension benefits, it also comes with a tax incentive. So tax incentive in that the contribution toward your pension fund is usually a tax deductible expense. So we have to factor it here. So we also deduct it. So, and again, AHL, affordable housing levy, also comes with tax incentive. Also come with tax incentive. So contribution towards affordable housing levy also qualified as a tax deductible expense. So we also have to deduct it. And we said that for this person who is earning 200,000, he is supposed to contribute 3,000. So we deduct 3,000 that was deducted at the source. Then we are going to arrive, when we deduct all this, we are going to arrive at what we call taxable income per month. Taxable income per month. Then this taxable income per month, we can translate it to annual pay. Translate it to annual pay. So that will, you must just multiply this by 12, we get 486,240. Then on this side also I've indicated the tax rates, the applicable tax rates in 2026. Yeah, the applicable tax rate in 2026. So we have 5 brackets. So the first bracket is taxed at 10%, second bracket 25, third bracket 30, fourth bracket 32.5, and fifth bracket 35%. So if you're doing this, if you're calculating tax payable, then, or gross, because first we arrive at gross tax payable, then is when we get to net tax payable or refundable. So for you to arrive at that, you must consider what is the annual taxable income. So annual taxable income for us here, after having deducted the relief and what undeductible expenses, we got 486,204. So that's what we use here. So this person fall under which bracket? This person fall under the third bracket. The third bracket. So first bracket, we calculate the tax. Just take 208,000 times 10%. We get 28,800. Then we go to the next the second bracket. So in the second bracket, just subtract the difference between the first bracket and the second bracket. You get 100,000. You multiply by 0.25. You get 25,000. Then the third bracket, you just subtract the upper limit of the second bracket from the annual pay, the annual taxable income, not pay, the annual taxable income, and we are getting the difference is 98,240. Then this you multiply by the tax rate for that bracket, that is 30%. So we are getting 29,472. So gross tax payable is 83,272. But we also have other relief. So for a resident person in Kenya, you qualify for a tax relief. You qualify for a personal tax relief of 24,000 per month, and or that translates to 288,000 annually. Yeah. So we have to subject that. So of course we'll subtract that so that we arrive at net tax payable or refundable. Then if you are contributing to shift, then you are eligible for what we call insurance relief. And insurance relief is usually 15% of the premium paid per month, with an upper limit or upper ceiling of 5,000 per month and 60,000 per year. So you calculate. So if you calculate that, this person contributed what? Contributed 66,000 toward shift for this year. So that 15% of this comes to 9,900, which is still below the threshold of 60,000 per year. So we deduct that. And also something that is worth noting is that for the pension contribution, there is also a upper limit. Yeah. So annually, monthly is supposed to be 30,000 per month. So if you contribute more than 30,000 per month, the rest, any amount above that 30,000 is going to be it's not going to be tax deductible. So that's important to note. So if we deduct this, then the tax payable, the net tax payable or refundable is coming to 200. Is coming to negative 214,628. So that means if it is negative, then it means it is a tax refundable. So tax refundable will be 214,628. So this is how the payee or payee administration for persons with disability look like. So you as a person, or if you know person with a disability, be able to understand this and apply so that you can be able to manage your obligations and benefits in this year 2026. Now, having mentioned this, I need also to take you through what are the requirements or what are the prerequisites for you to enjoy the benefits or the incentive that comes come with this. So for you to enjoy this, first criteria should be you must be registered with National Council for Persons with Disabilities and hold a valid disability membership certificate. Yeah. Then once you have this, you need to apply for tax exemption. So for you to apply for tax exemption, you will attach this certificate together with medical documentation, e.g. government hospital disability assessment. Yeah. So and apply for exemption via National Council for Persons with Disabilities e-citizen portal, and undergo the vetting process involving KRA, National Council for Persons with Disability, and the Ministry of Health. Yeah. So once you are approved, when you get approved, you will submit that tax exemption certificate to your employer, so that when they are calculating your monthly tax payable and even annual tax card, they be able to subject this, so that you be able to enjoy the benefits. So that's having been said, so just put it into action, and thank you for watching this. See you in the next video.